call to order this meeting for the Employees Retirement System of Tulsa County, Tuesday, May 26th at 10:30 in room 119.
And then I would like to do a roll call so I can determine who is here.
Okay.
Baker,
Yes.
Hurd,
Yes.
Lord,
Yes.
Simler,
Yes.
Ellis,
Yes.
Kaiser.
Yes. Thank you. Approve the minutes from April 28th regular meeting. Have a motion?
Motion approved. Second.
Baker,
Yes.
He said yes.
Yeah.
yes. Lord,
Yes.
Simler,
Yes.
Ellis,
Yes.
Kaiser.
Yes. Is there any unfinished business?
Not that I'm aware of.
Rachel is here from the treasurer's office to present the treasurer's report for April the 30th.
Yes, thank you. I usually start with market value changes for April. April was pretty volatile. Doug always touches on this later, but most noteworthy is domestic equities that were up 13.2 million. Also in April, we did a cash draw. We took 1.75 million from Barrow Henry Fixed and 1 million from Siegel Bryant to cover payables for the upcoming quarter. The transfer from the trust account to the DBA to cover payables was 2 million. And the snapshot for the month of April was a net income of 18.2 million. That brings the loss year to date with a loss of 9.5 million and total value right under 272 million. I'm happy to take any questions.
Do I have a motion to accept and file?
So moved.
Second.
Baker,
Yes.
Yes.
Lord,
Yes.
Simler,
Yes.
Ellis,
Yes.
Kaiser.
Yes. Do I have a motion to accept and file the investment manager report from Barrow Hanley, Meeking, and Strauss? And also Siegel, Bryant, and Hamilton.
So moved. Second.
Baker,
Yes.
Hurd,
Yes.
Lord,
Yes.
Simler,
Yes.
Ellis,
Yes.
Kaiser.
Yes.
Yes.
Commissioner Peters, sorry, I didn't see you come in.
Okay, Doug had another conference call, so we are going to move the investment consultant down to L, or will be actually between L and M. Are there any committee reports?
There are none.
Chairman's report, I'm going to say no since she's not here. Discussion and action, I'd like to take as a whole the refunds to be paid by June the 5th. Are there any questions?
Move to approve. Second.
Baker,
Yes.
Hurd,
Yes.
Lord,
Yes.
Peters,
Yes.
Simler,
Yes.
Ellis,
Yes.
Kaiser.
Yes. You have payment of the following invoices. I'd like to take those in the whole as well.
Approval. Second.
Baker,
Yes.
Hurd,
Yes.
Lord,
Yes.
Peters,
Yes.
Simler,
Yes.
Ellis,
Yes.
Kaiser.
Yes. Approval of retirement pay applications that will be effective June the 1st. I'd also like to take those as a whole.
Move to approve.
Second.
Baker,
Yes.
Hurd,
Yes.
Lord,
Yes.
Peters,
Yes.
Simler,
Yes.
Ellis,
Yes.
Kaiser.
Yes. Discussion and possible action, a waiver of 15 days prior to the effective date for the surviving spouse retirement application of Ruth Error, thank you, who was not aware of the timeline for application.
Tracy's good with it?
Yes.
Okay. Motion approved.
Second.
Baker,
Yes.
Hurd,
Yes.
Lord,
Yes.
Peters,
Yes.
Simler,
Yes.
Ellis,
Yes.
Kaiser.
Yes. The approval of surviving spouse retirement applications for Ruth Error and also Janet Jordan.
Okay, wait a minute, we have to take those separately.
Oh, sorry,
Because one is an application and one is, her spouse was already drawn.
I apologize. So the first one will be the approval for the retirement application of Ruth Arrow, surviving spouse of John C. Overford.
So moved. Second.
Baker,
yes,
Hurd,
Yes.
Lord,
yes,
Peters,
Yes.
Sandler,
Yes.
Ellis,
Yes.
Tyler.
Yes. Approval of surviving spouse benefit for Janet S. Jordan, surviving spouse of Oliver Ray Jordan.
move to approve,
Second.
Baker,
yes,
Hurd,
Yes.
Lord,
yes,
Peters,
Yes.
Sandler,
Yes.
Ellis,
Yes.
Kaiser.
Yes. Approval of cancellation benefits for the following: Peggy Morgan and Dolores Strange. Both had no surviving spouse.
So moved. Second.
Baker,
yes,
Hurd,
Yes.
Lord,
yes,
Peters,
Yes.
Sandler,
Yes.
Ellis.
Yes.
Yes.
And Doug is still not on there.
Do you want to go to N?
Yes.
Okay. Discussion of possible action, request of actuarial study for the following: allow full-time retirement after 20 years for all employees, and or allow full-time retirement after 20 years for only the sheriff office employees. I believe, Tracy, want to talk about that?
So, I know some of you are familiar that legislation was just passed to allow some of the sheriff's detention officers and jailers to, who participate in other retirement systems to do 20 and out. And so in June of 2003, we did an actuarial study to determine if this was feasible for our system. And at that time, there was over an 18% contribution that would need to be made. So I've had one request from a deputy asking how this legislation affects him. So I just put this on the agenda with Michael's direction to see if the board wanted to get this actuarial study done. So when this comes up, if this comes up, we will have more accurate information and can show them why we don't think this is feasible, or if it is feasible for our system.
What's the study cost?
I sent it to him and he has not made a cost yet. So if we need to, we can defer this until next month until we get the cost to give them the go ahead.
How long does it take to do the study?
Usually 6 to 8 weeks. And we're getting ready, we'll start our actuarial study in July. So they'll have the current data from this fiscal year going forward to do that study. So
do we know an approximate cost to do this?
we don't, John. I'm waiting on Milliman to give me a cost. I have asked for one that he hasn't gotten back with me yet.
Well, I think Dennis and I are probably the only ones on the board right now that dealt with this issue before. So I think it's very pertinent that we revisit it with an actuarial study to back up or support what we've already dealt with.
I mean, I can tell you right now, there's no way we can afford to do this without significant increase in funding. And you would want to start that funding well in advance of starting to allow the benefit, because otherwise the people that take it right away when the money hadn't been put in, the whole point is for the money to be working and compounding and investing, and the compounding effect of the investment decade after decade. Having said that, we can say that all day long, and that doesn't mean the deputies are going to go along with it. So if the cost is not too out of line, given that we're going to do an actuarial study anyway, I could support having a study of what it would cost to do the 20 and out for the sheriff's deputies. Having said that, I already know without the study that we would have to contribute significantly more than is currently being contributed, and we're contributing the maximum allowed by law. So I know the end result, but it's probably a good idea to do the study since we're having a study anyway.
The law's permissive, right? It just allows it that, but mandate it has to.
It allowed it, now I don't know that. And it's only for other pension systems. It doesn't directly address Tulsa County's pension system. So I believe it was Oprah's and maybe the law enforcement system as well. So we're just trying to head off the questions. It's been out there. They wanted to do it for years. And so I just felt like you guys should probably discuss it and decide.
Well, that's very common in the law enforcement community for pointing out that they're funded at a much higher rate too.
Yes,
You already perceive you're getting the cost, right?
yes.
I think we prefer to, next time we have the cost numbers.
Make that a motion.
Yes, motion.
I'll second it.
Okay, so we have a motion to defer this until the June meeting for John. Until I get the cost. Okay. Baker,
Yes.
Hurd, Lord,
Yes.
Peters,
Yes.
Similar,
Yes.
Ellis,
Yes.
Kaiser.
Yes. Okay, it still doesn't look like Doug has joined us.
Did you do this for about 15 minutes? Just wing it up there?
Well, you don't want me to sing, and I can't dance, so I'm gonna have to go back to you.
I have some notes. I have some notes.
Oh, my.
Okay, let me see if I can call.
Yeah.
They're work safe.
Are they Laffy Taffy jokes?
Another Google, a joke a day from Google. They're really good.
Wait a minute.
Oh, okay. What kind of shoes do frogs wear?
Hip hop shoes.
Open toed. What was the other one? The other one I really, what's the difference between a hippo and a zippo?
Hippo and a what?
Zippo.
One's lighter than the other.
Yeah, one's heavy and one's a little lighter. Oh my God. What do clouds wear under their shorts?
Clowns.
Clouds.
Clouds.
Sorry.
I don't know.
Thunder pants.
Get him on the phone quick.
You didn't answer.
Oh. How do mountains see? They peak.
Oh. I said we're waiting for you, question mark.
Why did the school kids eat their homework?
They're always not hungry.
Because the teacher said told them it was a piece of cake. What did the snail say while sitting on the turtle? Wee!
Because the turtle is faster
Yeah.
than the snail.
Sorry about this,
Is this thing on?
Yes, it is. You're on record.
Is it on the, oh,
It
will
is
be
live.
admitted?
Yeah, it's all on the record.
Yes. You're welcome, everyone.
Okay, so do we want to wait or do we want to, what's your pleasure?
I would like to talk to Doug.
Okay.
I really would.
Well, actually, you're not on my recording because I didn't hit the record button.
Oops.
It's okay, the WebEx is recording. Do you need another one? I have another one.
No, we really don't.
Oh, goodness.
next time I'll have to read slower.
Yeah.
You just tried to be small
So
again, we
fast.
get through the meeting real fast. You said I'm still on my other call for another few minutes.
I got a question. Uh, If I'm reading Doug's report correctly, our fiscal year to date is only down 3%.
I think it's the last month made up quite a bit.
I think that's through April 30th as well.
Yeah, I was just looking at that. If we're only down 3% year to date, we've weathered the storm pretty well.
Yeah, it was a very nice rebound in April.
Does that mean I should look at my investments?
Look at it. Yeah, look at them now. Shouldn't have looked at them at quarter end, but you can look at them now, April month end.
Hey, Melissa, while we're waiting on Doug, I'll just throw this out so you can mull it over in the few minutes we have, but you may think this is crazy, but I think I can defend it. I suggested to him that we consider not adding additional S&P 500 exposure, but taking that money and going to the NASDAQ 100. I was thinking along that line because I'm not sure that the old thesis that large cap tech is high risk, high reward, I'm not sure that that holds anymore. I'm not sure that there's that much high risk there. I mean, we went through a big shock here just recently, and initially large cap tech got cut up in the downdraft like everything else, but it recovered much more quickly. Not fully recovered, but largely recovered. And if we roll into the S&P 500, we're going to start there anyway. More bank exposure. I don't think we really want that. Basically, there's a lot of pressures, you know, and I could get into the details. I don't think I really need to. I'm not sure we want to pick up more Bank of America. I'm not sure we want to pick up more Chase. I'm not sure we want to pick up ExxonMobil, which is what we're going to pick up if we go on the S&P 500. If we go with the NASDAQ 100, while it is heavy tech, its tech is held up better than everything else. The biggest risk you have there is regulatory risk. I'm sure that you saw how there may well be some action by state attorney generals, antitrust action against Alphabet/Google this summer. But the reality is that's where the growth has been for a long time. That is where the growth is for the foreseeable future. They have tons of money. You know, they hold a lot of cash on the books. And at the same time, while it is heavily tech weighted, it's not exclusively tech. Believe it or not, PepsiCo is in the NASDAQ, consumer staple is in the NASDAQ 100. So it just seemed to me that we ought to at least consider that. And that's what I called Doug on this morning. I think I caught him off guard a little bit, said he never thought about it, want to think about it a little bit. But I would ask that maybe you think about that a little bit too. I'm just not sure that it's the great risk that it once was, that whole space is the great risk that it once was. And again, I think to the extent there is risk, it's regulatory. But every area that we venture into, no matter what area we go into, every area has risk of one sort or another. And so I just encourage you to think about that. And then if you tell me that's really crazy, that's fine, but I'd like to know why you would think that would be crazy.
Yeah, I think my initial concerns would be you are less diversified when you're in the NASDAQ 100, fewer holdings, and then you're right, you're concentrated in more areas compared to the S&P 500. However, both of them are pretty, the largest holdings, there's probably going to be some overlap. That's what I was trying to pull up. You would think, financials and more value-oriented names would come back in favor at some point. At some point, there will be a shift back to valuation. It just hasn't been the case over the last few years. And then so you had growth leading, technology leading last year, and then they still led in the sell-off, and they still have led in the rally. And it's kind of caught a lot of those investors who are more valuation sensitive. It's kind of an environment that we haven't witnessed for such a prolonged period of time, and to see such a spread and the difference of return between more value oriented and growth oriented stocks. So yeah, something let me look into it, dig into that a little bit more.
Okay, well, I'm just saying, I realize the S&P is much more than financials. I understand that. But that's dead money for as far as the eye can see right now. I mean, we're going to have low interest rates for a very, very long time. It's going to squeeze the margins. You know there's going to be a lot of bad debt, particularly, well, there's just a lot of bad debt across the board, whether it's even on the individual level, credit card debt, because so many people are unemployed. And just so many businesses going under, just a lot of business loans, and certainly in the energy space. So it just seems to me, I don't want to add to that exposure at all, even though it's more diversified going into 500 versus 100. And it just seems to me that you can be too diversified too, even though generally it's a good thing. And we're not talking about liquidating or investing ourselves in any of the S&P that we already have. So, and I think Doug may have come in there.
I have. Sorry, I'm late.
I was just expounding upon my thesis that the NASDAQ 100 was worthy of consideration. That's as far as we're going.
Yeah, I think that's fair to say that we want to be really thoughtful about how we're allocating into this marketplace. That's not something that I've studied extensively right now, and I want to look at that a little bit longer, but I think that we have some time right now. The markets seem to have stabilized, and I think that it's okay to take a breather, I guess, if you will, given that we are diversified. Now, the allocation of those big names in the portfolio are going to be dominant, whether it's in the NASDAQ 100 or the S&P 500 or the Russell 1000. But I'd like to take some time with that, and we don't have to act today. I would think that given our allocation, given some long-term thoughts about where we're going to be allocating, I think that's something we need to think about. Equities versus fixed income. But that's something that, through the summertime and the fall, that will be a good guide to how we're going to be investing, maybe just a little bit differently for the next foreseeable future. I will say one thing, that the capital market assumptions that folks like us in the retirement investing area refer to, the ones by JP Morgan, which is the industry standard. They've been putting out capital market assumptions for the last 24 years. And this year, given the drawdown in the market, bear market, for the first time, they have revised their capital market assumptions higher mid-year. Again, never been done before. But the upshot to that is that the math works out. So a 60-40 portfolio is, by these industry standard long-term forecast should be able to provide you, around a 7.5% rate of return. So, the issue of where we're going to be investing the equity portfolio is a big one. But I think that we have some support on investing in equities going forward. Now, the downside is that fixed income, normal core fixed income is not expected to do as well as we had over the past few years, given how low yields became during the drawdown. But that's a secondary importance in my mind. Mr. Treasurer, that's a very long answer. But I think I hear what you're saying is that we can think about avoiding some of those parts of the marketplace that don't look like they have any momentum going forward. And I applaud the foresight there and being open to maybe doing it slightly differently going forward.
John, do you still have your microphone on? Do you have your microphone on mute?
Yes, I do.
Okay. We don't know where the feedback's coming from.
Well, Melissa's on, that's all. It's quiet now, so.
Where did Doug go?
Well, Doug has got himself on, he's on mute. Can you see?
Doug had the background noise.
Oh, he's on.
Okay, well, in that case, Doug, thank you. Just give us some. Everybody went.
They're still there.
I'm here. Thank you.
Yeah, thank you, Doug.
Okay, so do we want to do a motion to accept the file as report, or do you want him to go over his report?
Doug, is there anything? Sorry, I'm not sure. Doug, is there anything you want to point out on your report particularly?
Briefly, markets thankfully have moved back strongly. We were able to take advantage of some of that, enjoy some of the returns. But again, there was really no time to rebalance during the quarter. Even Warren Buffett was not able to take advantage of the drawdown. I'm pleased that the markets are back where they are. We did make up some of the losses that we endured during the first quarter. We're poised to do better going forward. We have allocations to equities that should do well. But again, we're almost 40 million people put out of work in the last 9 weeks, which that's not the best time to be an equity investor. So I think the losses could have been much worse. I think April is a good month. I think that moving forward, I want to stay steady. I want to take profits where we can. And remember that we're very long-term investors. Had we panicked during the end of March and gotten out of equities, we would have compounded the problem. And again, that's just always how markets seem to work. They seem to panic quickly, trade off, and then before you see any signs of the economy or the problem being solved, they tend to recover. And that's where we are today. So steady hand is the way to trade this kind of markets, and our managers are actively trading the portfolio on our behalf.
Doug, can you turn your volume down?
Yes, I'll go completely mute here, actually.
I don't want you to go mute, because if you go mute, we can't hear you.
I think you just did.
Okay. I'm here. I am here.
Is there a radio, TV?
Yeah, there is. There's actually another call. It's another call, actually.
Okay.
Well, sorry for the delay. Thanks for waiting for me. And as far as the real estate goes, do you want me to address that?
Yes, please.
I don't think there's any rush for us to move into this. I think that I want to have two real estate portfolios. I think it's good from a diversification standpoint. And I think that the funds that we have chosen are good. I think that principal came back and was very, once we really pulled the string on them pretty hard, I think they were able to come in and do most of what or accommodate some of our preferences. But again, there's no real rush to move into real estate right now. I expect this to be a long-term allocation. And from my pure investment standpoint, I'm still ready to invest with them. But if it doesn't make sense from a legal perspective, then I understand that, and we will go to Plan B. But as far as wanting them in our portfolio from an investment standpoint, yes, I think that we still move forward with them slowly. No rush whatsoever. We're long-term investors, and so are they. There's a lot of implications to COVID-19 on commercial real estate that take a little while to shake through the portfolios and the markets.
Okay, so we will proceed then, trying to get the contract and everything finished and executed.
Yes.
Okay. Okay, I just need a motion to accept and file his report.
So moved.
Second. Baker,
Yes.
Hurd. Yes. Lord. Lord.
She's still on.
Yes, she's on.
Sorry,
Melissa?
I was double muted. Yes. I was double muted. Yes.
Okay, Simler,
Yes.
Ellis,
Yes.
Kaiser.
Yes. Is there any new business that we're aware of?
Not that I'm aware of.
Need a motion for adjournment?
So moved.
All those in favor?
All right.
Aye.
Bye.
Thank you all.
I seen you all again, maybe in person.